Angie, good to see you. Let's get right to the Fed. The market is leaning more towards 50 basis points. You're saying, look, I'll see you and raise you another 50 for a grand total of 100 by the end of this year. Why?
Yes, that is our base case. For a number of reasons. We had that CPI and that PPI report last week on the heels of the labor report. It seemed that the media reports were coming out saying, it's going to look a little bit more difficult to decide whether or not they're going to cut 25 or 50. But there are 3 meetings left between now and December 31st. And we think the data is going to come in. We know this is a very data-dependent Fed. And we also know that, there's been a lot of chatter about perhaps them tilting for political reasons. That is not the case. There's still data to come out on Tuesday, which is tomorrow for us, today for you. We're going to hear about retail sales. We're going to hear about industrial production. So there's still data to be determined really where we're going to wind up for Wednesday's meeting, but by the end of the year, we say 100 basis points, and then we're going to tell you another 100 basis points for 2025 as well.
Angie, talking about the data, the Fed's last update back in June, they were looking for still only one 25 basis point cut. If you're saying that they're going to have to deliver 100 by the time the year is out over the course of the remaining 3 meetings, that suggests that you are looking for the data, which you just talked about, at least some of it, to come in pretty poor.
This, I think, is what a soft landing looks like. Listen, Chair Powell is so close to achieving this soft landing. Again, he's very data dependent. I really don't think that this very long-waited Fed decision is going to be coming out to where we're really surprising anybody. It's been a very long time waiting for these rate cuts. So I think what's really more important about Wednesday's meeting is the messaging and the positioning moving forward. The market actually is priced in anywhere from 7 to 12 rate cuts between now and next year. That's what's priced into the market. When he talks about the summary of economic projections and the dot plot and all of that we know he's looking at, and he comes in saying, how we parse every word he says, and his positioning is not supportive of many rate cuts going forward for the next 12 to 18 months, then I think you may see the markets, react a bit up or down depending on what he says. But the time has come, as he said in his speech at Jackson Hole recently.